Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and we're going to do a quick one today. Let's just talk about the economic data coming out this morning, one of which I'm very curious about, and that's going to be the GDP revision for Q1. Also, actually, these are all very hot topic economic data points. You have initial jobless claims. We are still, despite the fact we're seeing a trend lower on initial jobless claims week over week, we continue on a monthly basis to continue to lose jobs net. And we are still, on a weekly basis, 200,000 initial jobless claims above the pre-COVID levels. So we want to see these continue to drop down, ideally. And we also have out later on today, durable goods, 8:30 a.m. Eastern Standard Time. Those are your washing machines, dryers, etc. And all indications have been that we may see a slowing there in durable goods. And that will be very, very disappointing for the markets. And the reason why we may get that slowdown is inflation. People are putting off purchasing. So while you had a coordinated statement released by the central banks yesterday morning, resulting in a rally in the markets, they're not going to talk away inflation. It's just not going to happen. Inflation is on the rise. Just pull up to your gas pump. It's here. It's not going anywhere quickly. And before I forget, tonight, Thursday night, Stock Charts Live, we're going to be getting together at 6 p.m. Eastern Standard Time to discuss. Hopefully I'm coming through. Hey, Sam, how you doing, man? Yeah, I shaved the beard. Yeah, for the summertime. We'll be getting together 6 p.m. Eastern Standard Time tonight to discuss the weekly charts. And let me see whether or not this is coming through clearly. Bear with me 1 second, folks. I think I have an issue with my mic. What do we got here? Bobby boy. Let me make sure I'm set up. No, it's accurate. How's the audio? Is it okay? I look okay. Okay. Mic sounds good? Okay, good. Thanks, JW. Appreciate it. So, Thursday night, Futures Stock Charts Live. Join us tonight, 6 p.m. Eastern Standard Time. Use the link below if you want to get alerted. Opt into one of our email lists. One is my top 5 candlestick patterns, or just simply enter your email address onto the 15-minute alert email list. Don't enter it twice because you're going to get 2 emails. You're going to get mad at me. We hate spam too. All right, let's do it. Let's go over the pre-market futures. Before we talk about what we're looking at this morning, which is a market that is under a little bit of pressure. We're coming off the lows now. Volume of late on the S&P 500, small caps, trip queues. While you had great price action yesterday, or good price action yesterday, great price action on the small caps, volume was just not good. It's bad. And this morning, no great shock to see that the market's under a bit of weakness. In particular, the S&P 500, which actually had broken down. This is a 4-hour chart. We had broken down below this red line yesterday morning. Actually, I'm sorry, on Tuesday morning, we broke down, and we've been consolidating sideways for the most part. Now, we are very close to all-time highs on the S&P 500. I'm not going to be the least bit surprised to see them spike it up on a short covering rally, just so the central banksters can say that you have a market that's hitting all-time highs. All is well. Don't worry. Don't look here. Just because there's transitory inflation doesn't mean you should not go buying stocks. That's what they want you to do, is to go buy stocks. Now, the Nasdaq 100 is under a bit more pressure, and as it should be. Yesterday, you saw yields rise, and that's not good for tech stocks. So this morning, we have the Nasdaq 100. While, yes, we had flirted with a breakout yesterday, it failed. We are down 0.40%. We are short of Microsoft, which is the largest component of this index, and we are short of the index. So we're looking for a pullback here on rising yields, which we got yesterday. We saw a bullish reversal bar, excuse me for hitting the mic, a bullish reversal bar on the Nasdaq 100, or the triple Q names yesterday. Excuse me, it's early, folks. Still, first cup of coffee. We saw a bullish reversal bar on the 10-year yield. My apologies. We saw a bullish reversal bar on the 10-year yield. And that does not bode well for tech stocks. And in fact, normally the triple Qs and the XLK, the technology ETF, they look very similar at the end of the day, those charts. However, yesterday was different. You had the XLK down while the trip Qs were up. Why? It's because technology knows these yields, if they're moving up higher, is not going to be good. So watch out for the 10-year yield. The Russell 2000 did well yesterday. We're down this morning, 0.22%. We are short. We have been short for 3 months. It's been stuck in a trading range. I mean, look at this. Is it a rounding top? Maybe. Is it a consolidation? Maybe. Who knows at this point? But we do know that on a monthly time frame, the Russell remains a bit overbought. It's less overbought than it was last month. It was a bit less overbought last month than it was the prior month. So are we alleviating that overbought condition? Maybe. We could quite very well be. So we want to keep an open mind and say, okay, the reason why we entered this trade 3 months ago, that thesis may no longer be valid, right? So we're not going to get married to our thesis. We need to update it and say, you know what? Maybe this is a healthy consolidation. Maybe it's time to pull back off of that short if we begin to break out here, because if we do break out above this line in green, which we've done a couple of times and failed, if we do break out again, maybe it's time to cover at least a portion of our position and perhaps take the entire position off. If we do break down below these support levels in red, which we've done multiple times, then it's time to lean into that short. But right now, we're just going to sit, watch, and wait. We're not married to the thesis. Let's take a look at the 10-year. Yeah. And this is the problem for tech stocks, folks. If you're long of beta meaning high volatility, you're looking at the 10-year Treasury note, which is declining. What does that mean for yields? Going up. That is not good for tech stocks. And it looks as though we're going lower here. Let's segue over to the US dollar. The dollar back down below a 90 handle. No great shock. So yeah, lower highs, lower lows. This becomes resistance. Let's go back to the 4-hour chart. This bar opened up at 5 a.m. Eastern Standard Time, 4-hour time frame. Let's see whether or not we close down below the support level. That bar will close out at 9 a.m. Eastern Standard Time. If we're talking about the dollar, we need to talk about commodities. Gold was down earlier. It remains down. We are in a rising uptrend channel, which is under pressure. You can see how we broke out and then failed yesterday. Silver. We are long of silver. Silver is down. Possible short-term double top here. I think it more likely that it's a consolidation than anything bearish. Quick peek at Coinbase, of which we are long. We bought it back here somewhere. And we are breaking out in the pre-market. So this is treated as well. It's our exposure to crypto. I couldn't tell you Bitcoin from a Dogecoin, or it's just not my forte. But what I do concern myself with more than knowing about crypto is risk. And one of the ways that we're not married to crypto, meaning who's going to be the winner, Bitcoin, Ethereum. I read an article today that Ethereum is the preferred crypto of Carl Icahn. You know, I don't know anything about it, to be honest with you. And I would prefer to stay long of in this case, a commodity or a company that has exposure to all of them. So it's a less risky play for me than what is being married to a specific coin. Natural gas. We're long of natural gas. Where is it? Where is it? I think it's NG. There we go. Natural gas is still above $3. We've seen a nice rally back. We're along of the leveraged ETF, which is Boyle. All right, so we'll take this. Oil. So this is not boding well for the S&P. The S&P could rally without having tech stocks rally, but it's going to become very, very difficult for the S&P to continue rallying if it doesn't have oil moving up higher. Why? You have your transport sector. You have your energy stocks. The perception of when you see oil rising is that there's economic growth, and it's important to have that illusion to keep the markets going up higher. And this morning, you're seeing a bit of weakness on oil. Hey, morning, Franklin. JA, the top may be in for gold. Inflation's probably not going to be that bad. I don't know about that, JA. Sounds you're reading those articles out of the Fed. Tommy, good morning. There's no way to stop this train, JA. They can't stop printing money. And that's the very definition of inflation. is the printing of money. And once we get the velocity of money picking up, which we have at current, inflation is going to be here until such time as they increase production. And as long as we have consumers out there that are being paid to sit at home and not produce, we have the. My analogy is this: is that let's pretend that we're all in a boat, the same boat, with the government, and it's a lifeboat, and the government has a shotgun. And what they're doing is they're taking that pump shotgun and they're blowing holes in the bottom of the boat. So as long as they continue to blow those holes in the bottom of the boat, it's going to be very, very difficult for this economy to grow organically without having the Federal Reserve and the federal government continue to prime the pumps. So inflation's here. I mean, look no further than the CPI data released a couple of weeks ago. Copper, yes, it's pulled back some, but this is a healthy chart. This is the pause that refreshes. Take a look at what else we wanted to look at. Cattle. I mean, cattle this week has made 52-week highs. What else? Lumber. Yeah, it's come in, but this is inflation, you know? So what I like to do is rather than take these statements from the Federal Reserve and other central banks, now they're talking in tandem because they want to pretend that it's not here. They want to take parking space up in our heads to make us believe that we're not actually paying more, and we are. So let's just take a look at the charts. What are the charts saying? And, you know, we have inflation, right? I could pull up pretty much any chart. Hell, let's pull up the Russell 2000. All right, looks like we're getting ready to burst out higher here. Is this inflationary? Of course it is. Stocks are overpriced. Corn, nice chart. Yes, we pulled back. We're probably going up higher. Soybeans, we've pulled back, but we're probably going up higher. Nice trend up. So inflation is here. All right. Let's take a look at a couple of chart requests. Looks like a JW put a comment in here. Oh, RTY. Yeah, you're talking about the Russell 2000. I believe that's what you're referencing here. And that's the futures contract, right? I agree with you. You have a head and shoulders setup on the Russell on both. You could take a look at the IWM, which is the small cap index, or the RTY. They look very much the same. Here's the M2K. Let's pull back. First on a daily chart. Yes, this head and shoulders setup is getting long in the tooth. Here's your left shoulder, head, right shoulder. We've technically broken down below one support level. We're flirting with an effort to try to recapture. Is this a sucker's rally? It could quite very well be. But the longer we consolidate here, the lower the probability that this is a head and shoulders setup. Doesn't mean that this is not a rounding top, at least on a daily and weekly time frame. Hell, on a 4-hour time frame. But when you go to a weekly chart here, you could also make the argument that we're putting in a strong consolidation. So that's why when I spoke about the Russell earlier, I have a short position, but we don't want to get wed to a thesis. We had a logical reason for getting short of the Russell 2000 3 months ago. It looked tired, and we were right. It stopped going up, but it hasn't broken down. So we were we were right in the fact that it was going to stop going up. Where we're wrong is that it hasn't broken down. So we don't want to go leaning into that trade until such time as we're proven accurate, and that's going to be a break below, let's call it 2101 on the Russell. All right, chart requests. mRNA. Oh, you're short as well. The June 21 puts. Okay. Let's use our friends over at TrendSpider. No pitch today on TrendSpider. There's a link below. What do we get? 30% discount, 30% discount. mRNA. Oh, Moderna. Good chart. We're down on the month, but it's looking good. We have a few trading days left to go. So while down in the month, it doesn't mean that it's out. We're holding critical support. We've rallied back to recapture, assuming that we close above the support level at around 176 per share. Weekly chart. Weekly chart with 2 trading days left to go. We have a breakout at 172 per share. Where did we close last night? At 175.59. So it's a good looking chart. Using the automated trend lines, you can tell you have really, really good support below. 2 good support levels. One at 158.65, the other down at 140, thereabouts. Daily chart. Daily time frame, nice breakout yesterday. mRNA, bullish. Nice RSI rising. What you may get here is a retest of support. Frank, I'm thinking about let's bring up LABU after this. Sold calls 170 strike expiring, 625 on A, B, and B. We'll take a look at that. Cool. I know Pat, one of our fellow members, was long of that. I haven't heard from Pat. He usually texts me. Pat, where you at, man? What else do we have here? Long. All right, so we want to know touch, bounce. I like the chart. Here's you, again, the automated trend lines, folks. Here's your rising upper band of resistance at current at 187. So good risk reward trade here. LABU. Looks good. At least on a daily time frame. You got resistance up here. So while the daily chart looks good, I'm a bit reluctant because we're trading up and into resistance. The daily chart looks good. This is one where I'd be interested in opening up either a strangle, which is the sale of a deep out of the money put and a deep out of the money call option, or simply selling a naked put deep out of the money, because we have a bunch, we've had a nasty sell-off. B, we're bouncing off of support levels and now beginning to put in, as noted by the automated trend lines. We're bouncing off of support here, higher lows now. So certainly one to watch. And by selling a naked put, it gets you far away from this resistance level. And after a nasty sell-off, such as what we've had of late, if you get long, you're getting a heck of a discount on the shares. So LABU looking very interesting. More to come, members, on this one. And potentially Moderna. It looks good. A, B, and B. What I like here is this. Where we're bouncing off of this 130 mark. Is that 130? Yeah, 130. We've stopped going down. All right, the first key to identifying when you want to buy a stock that's been beaten up, it's got to stop going down, right? We've got that. We could check that box. 130, critical support on Airbnb. And we have a nice volume shelf here. Actually, two volume shelves, which we're flirting with. And we're holding at current. So it's a high beta stock, but one that should do well as the economy begins to open up to travel. So I'm liking the play. I like the chart. Daily time frame, nice consolidation here. You are sold calls, 170 strike. You're naked on those positions, on that position, Franklin? Or you have the covered call? Because I like the stock. I think it's probably going to head up higher here. Just want to make sure you're covered. Although you're only going out to January. But still, it's a high beta stock. It can move pretty quickly. I like the setup here. 4-hour chart looks good. You're naked? All right. Think. I'm going to offer a suggestion. Think about selling a deep out of the money naked put to offset that call strike because you're consolidating nicely here. So just a thought to make that a strangle rather than just being directional on the trade, because technically selling that that call is a bullish, is a bearish bet. And you're seeing a stock here that's consolidating. Maybe you want to set up a line in the sand, just like I have with Shake Shack. If Shake Shack, which was short of, if Shake Shack closes above its 20-day moving average, I'm going to have to think about opening up a hedge against that short and making that directional short trade more of a strangle, a more market neutral trade. So just a thought on Airbnb. All right, with that, folks, please think about joining us tonight, 6 p.m. Eastern Time, and we're going to go over the weekly charts. So again, on YouTube, use that link below. Get notified 15 minutes to a half hour prior to us going live. And hopefully I'll see you there. We're going to go over the weekly charts. We'll take stock chart requests, go over the news, headlines. Till then, have a profitable trading day and be well.